biggest mistake you can make actually is to start by talking about channel level metrics, engagement, follow revenue, claim or attributed revenue, like that sort of thing. I don't think anybody takes seriously, frankly. And I think a good rule of thumb is that if you need to explain what it is, you've lost them already.
Hey everyone, in today's episode, we're going to be talking about selling retention up the chain from data to decisions. And I'm joined by GK as always, so let's hit it. Hey GK, how are you doing?
Really good, Mo. What about you?
Good, good. It has been a good day so far. Good Friday.
Planning to quit to leave early, huh? I can
Yeah,
see you're too happy.
I'm eager to leave early today.
It's good. Good.
So,
Let's get it strong.
yeah, so I'm excited for today's one because I'm the one that has been struggling with this for through my career, and it's not easy for a retention marketer or an email marketer to be kind of knowing how to present their work, how to talk about the results, which things that they should be talking about, and etc. So, as we said, we're going to be talking today about selling retention up the chain. So, starting with metrics, which retention metrics do leaders and specifically who are into finance, that which of those metrics that they trust and which ones trigger pushback right away, like they would push back?
Okay, I'll start with the latter.
Okay.
I think what they don't trust at all, and like the biggest mistake you can make actually, is to start by talking about channel level metrics, like engagement, flow revenue, claim or attributed revenue, like that sort of thing. I don't think anybody takes seriously, frankly. And I think a good rule of thumb is that if you need to explain what it is, you've lost them already, right? So you should be speaking their language. And the language they speak, particularly in finance, is like actual financial metrics. So net sales, spend, cost to acquire a customer, cost of goods sold, margins, whether it's gross or net, like that sort of thing is what those types of leaders actually care about. Now, to make it a little bit more, I guess, relevant for retention marketers that might be listening in, I think what you can do to convey your impact, because you won't necessarily be able to influence the cost of goods sold of a company, right? Like you won't be able to affect the spend that they have on ads. What you should try to kind of shift the discussion about, move it away from flows and the Klaviyo related metrics, I think you should try to take it towards repurchase rates, churn, and hopefully the reduction of churn also, and then lifetime value and CAC ratio. CAC is the cost to acquire a customer, and lifetime value is basically how much you earn from a customer over the customer's lifetime. Now, what most people mean when they say lifetime value is lifetime revenue, which is basically how much they've spent, which is helpful but not really indicative of the true value that the customer has for the business. What you actually want to do is find the value that's left after costs, including, as I said, cost of goods sold, CAC, and even the salaries really of the marketing team that are involved in the business. After all of this is removed, what's left? That's the value part. And most people forget to do that, and they focus on revenue, which is not terribly relevant in the grand scheme of things.
Follow-up questions that you mentioned salaries, like how would you approach this? Are you going to be telling them how much is the total salaries of your internal team? Like, how do you approach this with them?
So you're thinking about this from the point of view of the agency, which is logical because you work in an agency. Typically, the in-house team will know how much they spend on the department. Like you can get this information. You should actually be tracking this information as a business. For us as an agency, they won't necessarily provide this for us. So our calculation will likely be imperfect. We can guesstimate depending on the size of the team, and we can certainly include our own cost to the overheads. But yeah, if they don't want to share this with you, then there's not that much you can do, right? You should, what I think you should do is explain why you are looking to do this and what the purpose of doing this is. And then if you do this, I guess some people will be open to it. But yeah, if they are not, they're not. There's not that much you can do.
Got it. Um, how, like some people, even when you come up with them with, like, to them with the data, the leader or the CMO, and for sometimes some of them just want to do nothing. Like they want to just stay as they are, keep doing the same stuff, or even do less. So how do you approach that, and how do you put a cost on it for them?
Doing nothing? What do you mean doing nothing?
Doing
Doing nothing on.
nothing, doing nothing about, you have a problem right now, you have a low repurchase rate, low, like high churn. So where does this belong in your pitch actually for them?
Where does it belong in the pitch? I guess pretty early, because unless you agree what the problem is, then you can't really do that much, right? So I would say first step is to quantify the size of the problem, and just like imaginary math. You have 10,000 subscribers, you are churning 10%, so you're churning 1,000 people per month, 100 euros AOV, 50% margin. If those people had stayed just one more month, that's 1,000 times 100. So it's 100,000 in revenue. At 50% margin, that's 50K per month in lost profit every month. And if you extend this over a year, that's like over 500,000 in profit that you're losing. So if you do this, and I mean, those are made up numbers, obviously, but assuming that the numbers were real, it immediately becomes obvious to them, that, okay, this is a big deal for the business, right? And if we have to do something about this. So you start by quantifying the problem, I guess, and then the next step is to show what the potential impact could be. So in this case, you might say, what would happen if we go from 10% to 9%? So I don't know, like 100 extra customers retained per month. So that would be 100 times 100 per month. Or at 50% margin, it would be like 5,000 in extra margin per month, or multiplied by 12, 60K in profit by 1% improvement. So again, you are showing that it's a huge bleed in the business. And even if we do our job poorly and improve it just by 1%, it's still going to have this huge, huge impact. So it's worth the effort or the investment or whatever it is that you're trying to get them to do. So this is how I would approach. And then again, to your point about where do you put this into the pitch, um, I guess this depends entirely whether this is a priority or not for the business. Which, I mean, the numbers that I made up on the spot, it probably should, because shows that the potential is high. But if it's not a priority, then my advice would be find what the priority is, and then depending on that, kind of prioritize what matters, right? If it matters at the very beginning is best, because you want to be aligned with what the true problem is, the size of the problem, and then like what's the potential if there. I think I learned this a while ago. There's basically two main philosophies in terms of how do you frame things and like how do you convey your point ultimately. One is, and I think this is most common in the US, is to basically start immediately with the bottom line. We're losing this money. Let's fix it, right? This is applications first, as they call it. And then in Europe, we have another approach, which is called principles first, which is basically that you start with the context and the reasoning and the theory, really, and then you kind of get to the point, right? And it's highly cultural, is what I'm trying to say in terms of like what's the optimal way to convey this. For me, I'm more of an application first guy, even if I live in Europe. So I would just start with the bottom line, but knowing who you speak to also matters.
I mean, I guess you know this from the first conversation with them, just trying to gag if they are about bottom line first or context first, right? Like how do you find this out even if they are not that kind of talky? How would you know?
Are you referring like to me? Like for me, as you know, I do sales calls
Yes.
in the agency. So the way our sales call work is that like typically people book a call with you to learn about your service. So the call typically starts and they're like, we want to learn about your agency. We want to learn about what you guys do. And I never tell them, basically. What I do is that I'm going to tell you all about our agency, but first I have a few questions. And then I will ask them a lot of different questions. And by the time I've asked my questions, I do have a fair understanding of who I'm talking to and like how I should communicate to them. Like directionally, as I said, culture plays a role. So UK, US is more applications first. The rest of Europe is more principles first. Um, but I think it's also individual and brand specific.
Yeah, same. Like you're from Europe and you're
Yeah.
about context first. So we are against this. But yeah, as you said, you mentioned something that just stuck with me. Like 12, when you're doing the calculation, 12 months, 6 months. It's too long. Okay, for some they may not be that patient to see the result that you're trying to seek. Especially this is retention, it's not acquisition. Like you can see the spike on the third month or the second month that they did some testing. So how do you approach that, and how do you set the expectations so that they can stay patient with you until something actually shows in the numbers?
So this is a very big problem, and I don't think there's a good solution. Frankly, I think half the battle is to acknowledge that it is like this, that they will be impatient, and that they will more or less be ruined by now through the dopamine that acquisition creates. That you push money and you get money back almost straight away. So it's tough. What you should do is to kind of try and preset the expectation. This a lot of it has to do, particularly in an agency slash consultant context. A lot of it has to do with the sales process itself, because that's what tends to create certain expectations. If you enter a sales call and the salesperson tells you, we're going to do this and we're going to do that, and then it's going to double and it's going to be great, and then I'm going to do this and it's going to like even go even more high, and the metrics are all going to be green. If you start like this, then the person actually delivering the work is screwed, basically, right? Because they have to live up to an impossible standard. If during the sales process you kind of tell them, hey, it's going to be, of course, like a compounding effect, and it's going to take a while to actually see what's going on. And it's like acquisition is like door-to-door sales, but like we are kind of like real estate, right? Like you invest and then over time if you get the value. If you try to set the right expectations initially, I think it's way easier. Then I would say that there's an element of math here as well. And as I said, it's a compounding effect. So if, for example, you let's say you have 1,000 subscribers and you have half of them by month two, right? And then half of them month three, and half of them month four, and like it halves every month basically. If you go to month six, you're gonna have I guess like 60 people left. If you were to increase month two from 50% to 75%, which of course is a big lift, but just to illustrate, month two, you would not have uh, 500, you would have 750. And then month three, instead of 250, you would have 375. So an initial increase on month two kind of compounds over time and has a massive impact. And having the ability to kind of measure results over time, which is of course way easier in a subscription business. Much of what I say applies mostly in subscription business, but I mean that's the type of business we work with. Makes it way easier to kind of keep the brand or the client on the same page about what it is that we're doing. Because typically what happens is that they look at the top line revenue. And in our line of work, there's only so much you can do. You can do a lot to increase it, but there's a ceiling. So beyond that ceiling, you should start to look at the downstream effects of your work and communicate what it is you're doing there. Um, yeah, I think that's basically it. You want to start kind of projecting into the future the impact, I guess.
I get you. And it's similar to the quantification. You're trying to quantify that impact, but just saying if we just improve this in the beginning, which is going to compound by time. Okay, so I'm in a call with a client, and I have this cohort analysis, which shows this data month over month, and assuming that people in the room are not that um, like analytics savvy, if I can say, and I just start usually by, hey, this row shows you this and this row shows you this. Like, it's super boring and people get kind of thrown off, and they like their attention span is not kind of handling it.
Yeah.
How do you put a story into it? Like, I know, like, probably because someone kind of previously kind of said this to me, you should be presenting your data as a story. How do you make this cohort analysis, which is boring if you're not knowing it actually, to be something interesting like a story? How do you do that?
Transparently, I don't think a cohort analysis is kind of the best chart to use if you want to tell a story. And the reason why I say this is because it's kind of hard to understand, hard to read. There's three ways to read it, right? You can read it horizontally, which is how a single cohort performs over time. You can look at it vertically, which is basically the same stage across cohorts. So like, I don't know, month two retention for, I don't know, January, February, March, whatever months you're looking at. And then you can also see it diagonally, which isolates a specific calendar month across all cohorts. And this would be useful, for example, to see what's happening in Q4 or now or whatever. Like, you might be looking at a specific time frame. And then, of course, on top of this, you can also look at it in terms of absolute values, percentages, like relative, absolute difference. It's complicated, is what I'm saying. So um, I think it's a type of chart that requires a certain education to truly utilize, which I don't think a lot of people have. So if you're to use this, make sure you tell them what I just said so that you are all understanding what you're looking at. But honestly, I think the big issue that I see, and I've been seeing this for a very long time, before Yocto, after Yocto, is that we have a surplus of reports, but very few insights, really. So there's quite a few people that will tell you this is the chart, this is what the numbers say, and not a whole lot of people that tell you here's what you should do with it, which is what actually matters, right? It's like looking at your clock. You can look at your clock and see the time, but if you're not getting dressed more quickly, you're still going to be late. It's kind of the same thing. And in terms of what's the story you want to tell, I guess that's highly individual. But the bottom line is you shouldn't read them the numbers. They can read the numbers in most cases. And I mean, maybe not in a cohort search, but typically people can't read the numbers. Your job is to tell them, what do I do with the numbers? How does this change my business? Like, and I guess from the analyst's point of view, a useful question to ask yourself is, so what? Yes, we have like 10% drop in cohort retention. Okay, now what? What do we do? This question and answering this question is what's going to lead you to kind of communicate something that they remember ultimately. Because they will remember the what do we do part, not the chart.
Okay, so if the story is individual, I understand that. But keeping it about mostly what are we going to do with this, or what does this tell us? Like, not just go through the numbers. Do you suggest doing that brief explanation before? Because you have to briefly explain. Some people need to know what are you saying. Like, do you do this explanation ahead of the call so that you can save some time, or do you prefer to do it live, or it
Yeah,
doesn't matter?
it's a good question, but also I think the wrong question more because I think you are trying to kind of box this into a playbook. This is what we have to do. Whereas the true answer is know who you're speaking to, right?
Hmm.
Like we're having this conversation right now, and I know that part of the purpose of doing this is so that we can create sound bites that our editor can cut, and we're going to have a good short video that we can post, which is why I will say things like acquisition is like door-to-door sales. This is me knowing the purpose in the audience really that requires the soundbite. So to your point, it really depends on who you speak to. If you're speaking to life cycle marketers, they will know this already, at least the good ones. So you don't need to do any education. If you're speaking to somebody that's good with numbers, they most likely will be able to interpret this, even if they have no life cycle background. If you're speaking to somebody that's perhaps not so technical, somebody that perhaps is more on the creative side and not so much on the data side, then you will need to do some education. And to your point, is it better to do it before or during? Doesn't matter so much as long as you do it in a way that feels, uh, doesn't feel rather like you're looking down on them. That would be kind of my advice.
I understand what you mean. Okay. So this is something that happened with me, and I think it's like it happened with other people. Like I'm looking at the data, for example, I'm looking at the email list, and I'm seeing we have a big potential to be leveraging another channel, direct mail. I see lots of people are engaged, like from a long time ago, customers. Some of them even bought twice, and now they're not engaging with emails, and it's a big segment of the list, and they did not unsubscribe. Some of them unsubscribed, but some of them did not. And I want to be building a case for someone who's going to make the decision inside of the brand, probably the CMO or
Yeah.
even the founder. How would I approach this in a way that's not boring? And of course, I'm going to be knowing who I'm talking to, but what, like, do we have a frame? Like, there's a frame that I can follow to structure this so
Yeah,
that I can get the budget?
I get what you mean. Again, principles versus applications first. Different cultures require, like, don't do what I'm saying in China, for example. It's not going to work. But the way to think this is very much related to risk because think about what this really means, right? You want to test something on somebody else's dime in a way, right? That you are getting them to foot the bill in a way. And if it doesn't go well, of course, the idea was yours, but they're the guys that approve the budget, right? So you are essentially asking them to take a risk. And the key here is to de-risk it as much as possible. Like I said so before, but I would start by the problem. What is the size of the problem and what is the potential or the opportunity here? We are losing XYZ people because they don't engage with emails, we are not able to reach them with emails, are not visiting the website, but it did show purchase intent. So there is a very good case to be made that if we reach them through physical mail, they will convert. So start with the problem, then the opportunity, and then you want to basically briefly describe the plan. We think we're gonna, not we think we're gonna do this and this and this, and we think it's gonna work this and this and this. Then we think it's gonna work like this and this and this. You want to ideally reference similar cases where you've seen it work. So in your particular case, what you could do, let's suppose you're trying to pitch direct mail to one of our clients that don't use it. Like the way I would approach is I would first look at our internal team and say, hey guys, can I get some data in terms of how this particular flow converts? When you target users that have abandoned the checkout without completing an order and then not opening an emails for the last, like what's the conversion rate? They would probably give you some data. Assuming that they were unable to give you the data, I would go to our tech partners. I want to give a shout out to PaperRun here. I would go to PaperRun and I would say, hey guys, we have this case here. Can you provide some data in terms of how similar business cases have worked? And they're going to tell you, you know what, you should expect like a first time ROAS of, I don't know, like 7, because it really works. And now you have a business case that you can make, because you can say it costs this because the size of the audience is this and it costs X per mailer, and the size of the potential opportunity is this because in cases like this, it converts like this. And we're going to measure this through that and that metric. We're going to do, I don't know, a holdout test where people do not receive mail and then another group that does receive mail, and we're going to see how this affects lifetime value. And we're going to give the test 90 days because the mail is going to take some time to arrive, and then people perhaps use the coupon later on because they may have the mail sitting on the desk without buying straight away, but we will have late conversions basically. So it needs a little bit of research basically to prepare like a solid business case. But if you do this, you are de-risking it quite a bit. You are at least giving the approver of the decision the ability to say, I did this because I had good data that led me to take to this decision. I didn't take a wild shot in the dark, right? So that's the plan, at least.
That's a good framework. And just the big learning that they are taking a risk on you. Just keep that in mind. You are not actually the one calling the shot. They are the one calling the shot. So making it easy for them to take the risk is not going to be by trusting you. It's going to be trusting the numbers. So showing with just an idea, it's not. Yeah, maybe it's good to kind of give them inspiration, but it's not going to lead to executing on this. Okay, so we have a this is happening to me sometimes. Like we have like a bi-weekly calls or weekly calls with our clients. Some of them, the entire team is joining the call, and some other calls, not the entire team is joining the call. So when the entire team is joining the call and you have the founder and you have the CMO, you want to be more focused. And usually those meetings are shorter in terms of like the time that you're allowed to kind of present, because you want to be keeping some time for discussions. So let's say that you have 15 minutes, okay, in one of those meetings, like let's call them the board meetings, and you have just a couple of slides or maybe just one slide. What would be the single metric that you would show? And let's start with the metric. What would be the single metric that you would show? Knowing the case, of course, knowing that we have been working together for some time, you have this big problem, probably maybe retention. So you can go through a specific example.
Lifetime value lift over a period of time. And like, I mean, you have very specific requirements, like it's one slide, you don't have time. Okay, so like I guess that the quickest possible way to convey something is basically a before after type of format. Like one slide, there's like before and there's after, or maybe there's like line charts that shows like one line is without Yocto and one line is with Yocto, right? Like so that it's very obvious what the difference is. And then you want to have like a very concise way to say impact, and then a very concise way to say cost. So it would potentially say something like, I don't know, 180K in LTV, an extra LTV over the next 6 months, one of cost of, I don't know, 15K or whatever it is. That I guess there's no shorter and simpler way to convey impact than this.
I like that before and after.
Before, before and after. When I say before and after, like basically I mean a line graph. I guess is the better way to do
Mm.
this. So this would be the LTV without us, and this is with us. The total that you will gain over a period of 6 months or however many months is this, and this is how much it costs. There's no better way to kind of quantify the impact than this, I guess. No,
And
no quicker way to be precise.
okay, so this is specifically tailored for those meetings that you want to be pitching an idea, right? Would you use the same format if like you have like this update after the first 3 months? Would you be also using the before and after, even if the after effect is not that, like would you say before 3 months and then after another 3 months? You know what I
Can
mean?
you rephrase this?
Yeah, sure. So you are with a client, you have been working together for 3 months,
Mhm.
and you have a board meeting, and in this board meeting you have the founder joining, which he didn't join for the past 2 months and a half. Last time you saw him was just in the beginning, and now you know that he's going to be joining, so you're going to be showing the impact, and you're going to be doing the usual slides, but you want to be showing the impact the first 15 minutes just because probably he's not going to be joining through the entire call. Are you going to be doing this slide like before you started working with Yocto? Here's what's happening now in terms of impact, and after another 3 months.
Oh, so basically your question is if I would do the same if I was forecasting or
Yes.
projecting. The answer is yes, but I would just make sure to convey that this is uh, an assumption, right? Like I'm not me. Nobody can really predict the future. So based on what we see now, we expect the trend line will continue like this. But yeah, it's the same logic.
Okay, got it. Okay, let's say it went things went like you tried some tests and it didn't work, and you have negative results. So we have talked about the positive. Let's talk about the negative, because not all
What?
life is
Negative?
negative.
Negative result? Never happened.
Not in Yocto, yeah.
What do you mean?
Let's just say it happened, okay? Even if it's we're doing our best, sometimes a test could fail. It could happen. How do you present it without losing credibility? Or just let's say it happened in the first 3 months with a client. We have other wins, but some other things did not go well. You probably want to go with clarity for sure, but how do you make it in a way that doesn't lose your credibility?
I think you should be the one answering this, not me, because you are great at this. I've seen you kind of in situations where not the results were negative, but the results could be better. Let's put it like this. I mean, there's, I guess, something that applies to everybody and something that is mostly relevant for service providers. I'm going to try to cover both. What applies to everybody is that you should generally be addressing this openly. Like if people feel that you're just spinning things and kind of putting bad things under the bed and like maybe hiding a little bit, it's terrible for trust. Nobody likes this. You should not be doing this. Ideally, you want to address not just the problem, but also why it happened. So not just I don't know, results are down, but the results are down because of X and Y and Z. And then on top of this, ideal case scenario is to include how you react to it. Results are down because of X, Y, and Z, and this is what we're doing, and we're already on it. That's kind of the best way to go about it. But there is an element here which again applies to service providers, which is that you need to do this in a way that doesn't damage the firm that you work with. Because if I do this and I overreact, the client feels panic. It's terrible. Something big is happening. And what you always want to be doing as a service provider is being the source of calmness, basically, right? So you want to be like in the energy you want to channel is like doctor. You don't see like doctors. They're like, okay, I'm going to take your temperature. They're not freaking out that easily. You want to kind of have this type of vibe when things go bad. Yes, there's something going bad. This is why it's happening. This is what we're going to do. Chill. Don't be panicked.
I like the doctor analogy. Um, okay, something like one. I have one last thing that I want to ask about, and then I want to have your free thoughts on what would you like sell, what would you would like to tell, not sell, what would you like to tell other retention marketers, maybe people who are just starting in the industry, maybe who have been there for 4 to 5 years. So let's just go to that question first. Okay, suppose that you're working with a brand and their entire north metric for a couple of months was growth, basically growth in terms of revenue. And then you are in a meeting and the CMO tells you, okay, we are pivoting to pure profitability. So this requires a big change in your strategy for sure. So how would you do, like, how would you react in the call? How would you reposition
Yeah.
yourself?
What you asked is the essence of the retention clarity gap. It's the most important question you asked me, because the truth is that there's nothing better you can do for profitability than retention. Because think about it, right? Every customer you retain is a customer you don't need to reacquire. So if the cost of acquiring customers goes up, that's where you should be focusing on. So the problem, and this is why it's the essence of the retention clarity, and this is why I think this whole discussion is interesting and hopefully helpful for people that are listening in, is that we as retention marketers need to learn how to communicate our impact a little bit better. Because if you stick to attribution that can be challenged, like what Clavio will show you, if you don't understand the difference between, I don't know, like revenue and net sales, if you don't understand how your work ultimately allows acquisition marketers to spend more, like they can allow CAC to go higher because they know they will make it back on the back end. If you don't understand those things, you're going to get in trouble when the CMO or whoever tells you, hey, like we're cutting costs. And you know why you're going to get in trouble, because they're going to say, what are you doing? You're just building emails. The flows, we have them already. We don't need you. Emails, we can hire somebody to put them on Klaviyo. And they will be right. They will be correct to say this. Unless you are able to communicate the impact and actually affect those other metrics, right? And not just talk about, but actually affect them. They will be right to cut you. So how do you deal with that? You deal with that 6 months before by having communicated your impact.
And
That's
if
the
they
true answer. If they don't, if you haven't done so, like find another job. That's the solution, because they're
remember,
gonna let you go and build the emails themselves.
Like questions that are for the audience. Okay, some of them are for me, but yeah, most of them are for the others. But so you're saying I should be the one and like starting this conversation about profit even before they putting this as their north metric, right?
Yeah, and if you do this, everybody's gonna like you.
Okay,
They're
got
gonna
it.
appreciate this a lot.
Okay, got it. Okay, so we are almost done. So I want to end this episode with some free thoughts on your mind that you want to be giving some advice to people who are joining this career or has been in this career for a couple of years, but I know that most of this is going to be valuable for them. But do you have something else that probably I could have missed today that you want to be saying to?
Advice to retention marketers.
Yes.
I think it's extremely obvious that if you take what is already happening with AI and extend it a little bit into the future, the bottom of the industry is going to be wiped out extremely fast. Productized services, entry level setups, like core flows, like that. It's going to all be done automatically. Like there will be a time, and this is happening quickly within the next 1 year, where you will be able to go in the platform and say, I want to check out abandonment. This is my information for my brand. Boom, it gets set up. And of course, maybe somebody that has been doing this can do it a little bit better, but a lot of small companies are not going to want to pay that person to do that. So they will just do it like this, which ultimately means, and the bottom line for people is, if you are in this industry, or if you want to enter this industry, make sure you work somewhere where you will actually learn things and work extremely fast and extremely hard so that you actually do learn things. Because there won't be a market for basic services, I think. And right now, the gap between being excellent and being serviceable is only widening. This is why Yocto does so well, by the way, because basically every client we work with, I think without exception, was working with another agency before. And every client we work with, again, without exception, has said that we are, I guess, better than that other agency. So there's a tremendous gap in the industry in terms of skill. I can't hire people. I can't find people. It's so difficult to find like actually talented, knowledgeable people. But automatically this creates an opportunity because if you really do try and if you really do step up and if you really come work in a company like Yocto where you will actually learn, you can create a career that's going to be great for the long term because the upper tier, I don't think is going to go anywhere anytime soon. It's the bottom of the industry that will get wiped out. So to make it concrete and concise, work extremely hard at an environment where people push you to get better every single day. That's my advice.
That's a good chance that you can say that we're hiring. You want to give a last call to action?
We are always hiring. Text me on LinkedIn. I'm online all day, very active. Just text me and send me why we should hire you and not many other. I just want to say this not to brag, but because it's good for people to know. Like we opened the position, we got 2,000 applications within, I guess, 10 days or so. But there is a lot of competition. When you apply, like think through what do I bring to the table that others can't, because there's actually quite a few other people um, that are looking to get a seat at the table.
Right. You've heard it, people. Just show your differentiated value in GK's LinkedIn inbox. Thank you so much for your time, GK, and I appreciate it. And talk to you next week.